how do we achieve this outcome confidently? It comes down to a disciplined investment process. And this process will lead to an outsized return. We've been following the same process since the inception of the fund. First, we study the top investors in the world. Every quarter, we pour over 13F filings where portfolios of investment legends like Warren Buffett and Lee Lu are available, and they're making significant allocations. And given all of their resources and wisdom, it's worth taking notice. Academics have proved that this is advantageous, and it's a great starting position for your own research. So these legendary portfolio moves are public, and they often can spotlight a potential opportunity. So it's like getting a stock tip from the smartest minds in finance. So as I'm going to show you later, we've developed proprietary technology to synthesize these 13F reports, and essentially across 100 different funds, each quarter, we find that there are only 400 to 500 unique stocks. And the environment, the US environment alone has 6,500 securities. So this process focuses our attention on less than 10% of securities in the market, and the focus is on the firms that matter. Second, we perform deep fundamental analysis. We dig into the financial statements. We're looking for competitive advantages. We're looking at management quality. We're looking through all the fundamentals. And our goal is to determine the intrinsic value of a growing business and confirm that a significant gap exists between that intrinsic value and the stock price today. So in a few minutes, I'll share with you a very impressive AI research platform that we built, proprietary platform we built in-house. Using AI, we have condensed weeks of analysis, perhaps months of analysis, into 20 minutes or less for any public company in America. It's totally unprecedented what we've created. This scale allows us to identify opportunities at incredible speed. And we're extremely progressive in this AI space, and these bold moves have proven to be outstanding opportunities. In step 3, we apply a practice we've termed structured value. And in the simplest form, after identifying an opportunity, we don't just buy it like a retail investor in the stock market with a market or limit order. Instead, we write a cash secured put as a tool to gain access to the equity. We get paid upfront for our commitment to buy the stock that we want to own, which reduces our cost to below the prices in the stock market. And then finally, in step 4, we address our allocation and our position sizing. But not every great idea deserves an equal slice of the capital pie. And we work hard to determine that allocation objectively. We concentrate more capital into our highest conviction ideas. Portfolio sizing ensures that the impact of our best ideas are maximized while the overall risk is kept in check. So each step in this process adds value, it adds alpha. And together, this methodical process is the engine behind our results. And what does that process deliver in practice? When we talk about compounders, we mean businesses that grow their earnings and value steadily year after year. These are companies we would be happy to own for decades or more. The kind you can hold forever, as long as they remain great businesses. And Buffett often says his favorite holding period is forever, and Phil Fisher reminded us that if the job has been correctly done when a common stock is purchased, the time to sell is almost never. So what do we look for in our portfolio companies? We have 3 main criteria. We need a superior business model, we need an extraordinary management team, and we need extraordinary value. And when you find all 3, it's hard to go wrong. So our long-term mindset is essential for success. These things don't happen overnight, but they will happen over time. Seth Klarman put it best. He said the single greatest edge an investor can have is long-term orientation, and we really take that wisdom to heart in our portfolio design. Our holdings on the right side of this screen, you'll see they all have net cash positions, positive cash flow, and they're growing. We own high quality undervalued businesses that we can own indefinitely, letting the time and compounding do the work for us.